So as you can tell, it says, "Are you getting greedy?" There's a specific reason why I labeled that, and a specific reason why I said that's related to this quarter. So, the main thing was that I was just gonna do this call for my group, but I did want to just open it up to everybody because I think it is that important. And at the same time, I also know that like the people who want it are going to learn, and the people who don't want it will not learn. That's all it is. So anyway, as regards to this year, starting 2024, I think people are starting to like really figure out like, okay, I want to focus on small caps. This is how I'm doing it, but their timing might just not be absolutely right. What I mean by that is like I know a couple of people who started asking questions and started like learning how to trade this around like November or so. And at that time, the market was like, uh, I would describe it as slow, but mainly because of like the earnings and because of Thanksgiving, and also just because of there's like this overarching cycle that I like to share with my community, which in a nutshell is basically like there's always this cycle in the small cap space between bulls and bears. Like, is it a bullish environment? Is it a bearish environment? Very rarely is it like absolutely neutral. And essentially, like what that is like which side is in control, which side is basically getting the most out of these moves. Where is it going in their favor? Like a bullish environment would be short squeezing like crazy, big moves, the VVOSs of the world, 1,000% runners, right? The bearish aspect of it would be like similar to now, where there's like a lot of stocks just fading off, pop and drop, no resistance whatsoever, no ability to squeeze shorts, and a lot of trades that are like lower quality basically just dying off. And essentially, in those two phases, like the next phase of the cycle is initiated by the greed factor of the party in control. So, for example, like if the bulls are having 1,000% runners every day, things are just all like going crazy. Eventually, people become greedy, right? They try to attack every single play with the intention of like, hey, this is going to go 1,000% too, or this works right now. I'm going to just keep abusing that, but like with bigger size, or they start to build confidence, right? And the funny thing about confidence is that it always leads to a downfall because what happens is like when all the shorts there who are going to be squeezed will be squeezed, when all the short sellers who didn't necessarily blow out like basically lose confidence because it's not working, they don't understand why. And when long buyers are basically attacking anything for the sake of it, that's where you get the turn, where like inflated moves on air basically lead to like really good short opportunities. Inversely, short opportunities where or bearish markets where shorts are so like content with everything that's happening, trying to compound the risk, doing things like adding to winners, for example, like aggressively taking trades outside of their playbooks because they just see it, they get FOMO, and essentially like seeing moves and be like, oh, let me just go really hard on these stocks because all I'm seeing is just, hey, just keep working. That leads to situations where that overconfidence allows short squeezes to occur because now all those people who are piling in on bigger risk no longer, well they no longer are able to kind of like manage their expectations properly, partly because of being unaware of cycle or even just giving into their own emotion, and they become fuel for fire. So basically, like you will become cannon fodder at some point, and you will cause the stocks to squeeze. When stocks rip up like 1,000%, that's not just like buying most of the time. It's like 90% of the time, it's literally just everyone stepping over each other and continuously getting stopped out or not getting stopped out and eventually potentially getting margin called or putting themselves in a erroneous situation. So recognizing those cycles is very important for manager expectations because it allows you to, instead of getting caught off guard by everything going right, all of a sudden, it goes tits up. Instead of being off guard, you're essentially like aware that this will happen. So you look at the situation, you go, it's too easy. It feels a little bit like too quiet. When is the next big move going to go against me? And when it happens, you don't necessarily need to like play complete defense. Like you don't have to say like, oh, I will just not be involved. I will not participate. You would basically just take it on the chin if it happened and say, okay, whatever, like that was going to happen. So what I see is like my general sentiment, and because I get to talk to a lot of traders like within my group and all that, is that people are getting extremely greedy, and this is not just a one-off thing. This happens all the time. People are getting extremely greedy. We're like, how can I add to this trade? How can I increase the risk? How can I reduce my stop? They go, oh, I see that trade working. I don't know how to trade it, but I'll trade it because why not? Like if it's going up, it's going down. That's fine. I see it over and over again. Like let me be involved. Um, and that's one aspect of it. So regarding that aspect, it's kind of like, have you ever heard of this concept where like you're the last one to find out, or like you're the last one to know? So like when it came to all these liquidation plays and stuff like that, Chinese liquidation plays, when I basically found out like what to do about them, that's when eye lag happened. Okay, so it's gonna happen not only to me but also to you. It's like if you're recognizing patterns that are working consistently, or you're recognizing opportunities that are occurring around you, specifically when you don't really know that much about it, like you're the last person to understand it, that's when the risk is the highest. And I think people don't recognize that and put themselves in like a compromised position, thinking that they have just discovered gold, when in fact, like they're just experiencing the normal rotational cycle of the market. So how you need to view these situations actually is that like consistency is the ultimate kind of goal, because what that does is allows you to navigate through multiple cycles with very similar kind of parameters and set variables in terms of like your system or like how you trade. And essentially you should be able to like map out like if we're in a bullish cycle, if we're in a bearish cycle, like how is my performance measured against that? Because for example, like you could right now just be like, okay, let me just hammer it out, like get like the biggest trades ever, like either no risk or just keep adding in blah blah blah. And you're gonna have a great time. But then when it becomes like a bullish market, you will just go into an insane drawdown. Like there's always pluses and minuses to everything. Personally, I like to kind of be on like the more even scale where like I'm able to like maximize bearish markets to like a good degree, but at the same time are not like not super susceptible to bullish markets, and not fool myself to think like when things are easy that it will never be difficult again. Like it always happens. Like the market literally runs on this psychological like human erroneous kind of thinking. Like it's you think that it's good, it will always be good, or if it's bad, it will always be bad. That's another thing. There are people who literally like come into the market, they hit the wrong cycle, they take losses, and they just give up and they move on. Like they're like, okay, I'm just gonna change my strategy. No, like you don't want to. Like that's actually really important information. The problem is like you don't get accurate information um, without kind of seeking wisdom, and there are not like that many people who are like imparting the wisdom because either maybe not being aware of it or just not being good teachers. So essentially, like you need to be able to reference somebody, or you'll never learn this aspect of trading where it's like, okay, things are kind of weird right now, and be like, Brian, how do you feel about that? Like, do you think that I should give up? And I would basically say like, no, because there's a situation, for example, in December, where like the last 2 weeks for my group, I noted like very interesting outlier kind of weeks that are not particularly normal. Like as somebody who's traded the market for like this particular for like 7, 8 years now, and it's kind of like if I can recognize that, but you don't recognize that, and you go through that, and you think that now I'm going to optimize for this scenario, and it does not help you for the rest of your career. In fact, it might dissuade you from doing the right things. Then you will never like make progressive steps towards being consistent in this market. It's really, really helpful to be able to recognize like what information you need to internalize and take in and like improve your process with, and which information you need to omit. And so what I'm saying right now is like, if you've participated in that like late December, like early January market, you would feel a certain way about the market because like literally every day is like nano float, alt out of gate, like crazy, just crazy stuff like that. Completely abnormal kind of market, really. And that was following basically that November was kind of like earnings, whatever, holidays. And if you don't know, like markets kind of run on the psychology also of like everyone, like not even just participants. Like it's one thing to say like, oh, I love Mondays, I never take days off. Like let me just trade every single day, and you're that committed guy. But like people who run these companies and like underwriters and other participants, like when there's holidays and stuff like that, they just take it off. Like if there's Martin Luther King on Monday, they're like, fuck it, I'm not gonna be here on Friday. I'm gonna enjoy a 3-day weekend. Like not everyone is that committed as this like small group of professional like or aspiring professional traders. So just recognize like no matter what kind of expectations you have, there are just things that will affect like the trading environment that are very human. It's not voodoo. So basically you had that kind of market leading into what I would describe as kind of like a very bearish market now, maybe for the past 2 weeks. And what I'm seeing alongside people wanting to just be more aggressive in general is like really getting loose with rules, like loose with stock selection, seeing like, oh, okay, let me just trade that because I know this works because I see it every single day. It just comes up, comes down, there's no resistance, or it goes down, let me just keep add to winners, whatever. And they have no idea that they're basically sowing the seeds of their own demise by doing that because of the cycle. Like you will be part of the cycle. Unless you can detach yourself from taking in too much inaccurate information towards how you optimize, you will never really like escape this boom and bust repetition. Okay. Um, so you have basically like a powder keg waiting to blow. People taking tremendously stupid trades. In fact, like there are a lot of people who basically will say to you like, just short everything, like literally just short everything. And I don't necessarily disagree, but I do feel like it's naive. And the reason why is because I know exactly what that experience is like because I've done that before. And I can tell you like that kind of motivation towards trading or that kind of like feeling about trading, all it does is leave out all of the nuance that is really important and that very high level traders pay attention to. Because essentially what you're doing is you're just trying to play the slot machine or you're trying to play like the casino game where you're like, I just play the law of large numbers, etc. And you don't realize that there's always going to be moments like within every single year and every single cycle where you're going to go into a streak where it's going to be completely out of your control. And because of your agnosticism towards information, you're essentially going to lose without the ability to analyze properly what exactly is contributing towards that loss and not being able to grow from it. There's a such thing as winning without it being a good trade. And that's when you're basically reinforcing very poor habits and very poor, mindsets. Like just for example, I'm going to give you like a very realistic example. So how many people took the trade BFRG yesterday, Bullfrog, and how many people got chopped up or squeezed out later on that stock on the day? And how many people took the stock not because there was a good reason to in terms of thesis or edge in general, or if that was in their playbook, but rather that they were having FOMO or that they felt like they missed other opportunities and wanted to take this trade instead, or that they were just bored. And this kind of behavior is spawned from these cycles that punish people who have no ability to logically look at the trades that are coming and going and differentiate them from like what would naturally make them successful in the future. They're only reacting to what's happening right now. And the thing is, once you allow those trades to basically become something you accept, without the ability to like analyze why it was bad, you essentially create this very bad habit that will continuously keep pulling you back from where you want to be. Like your ultimate goal as a trader should be to seek consistency, because in consistency you smooth out all of the variables, like you smooth out all the volatility in terms of like I did this way of trading in October, and in November I traded a completely different way. In December I traded a completely different way. Well, if you understand like the market cycles, like any single one of those strategies might be the strategy that you should be pursuing. However, like because you're so reactive to the current environment, you don't allow yourself to stress test amongst multiple cycles. Like just going through one full revolution of a market cycle doesn't make you a professional trader. Like you really ultimately have to be able to have gone through a lot of different scenarios, like including outlier max loss situations. For example, I'm going to use my friend Bear here. He literally did not have a drawdown for a whole year until December. And it's not even like that the drawdown was because of him, it was because of the market. And he was able to recognize something is different here. And he can shut his system off or he can adapt in those situations. And the thing is, like, if you're not able to basically recognize, like, okay, something's off here, then you are missing some piece of the puzzle, in my opinion. And that's where the experience comes into play. And again, that's why experiencing one full revolution of market cycles doesn't make you a god of trading. Like it actually takes a lot of diligence and a lot of experience. So what I basically want to warn you about is like, if you overemphasize techniques and strategies that will work right now, and you encourage those behaviors by just continuously doing them, getting rewarded, then you're going to hit that cycle revolution and be a victim of it. And also, you're also going to go into what I would consider one of the, the 4 periods of the year that's kind of annoying, which is earnings. So there's going to be like an earnings season going up. And if you don't understand like how earnings affect the market at different periods, then you're also going to be missing some aspect of understanding, because you're going to like, ultimately what it comes down to is like if you're unable to recognize like the variables that go into each environment, and you walk away with certain like lessons and like optimizations and whatever, you're just playing this dangerous game of like having information go in and out and like being very unsure about yourself. Secondly, like when and if you do take poor trades, like there's nothing wrong with saying like things are working right now, but you also need to be able to evaluate them on a scale of like, this trade is basically like a C grade trade. I know for a fact like I typically wouldn't take this. if it goes against me, I know that I kind of expected that, like I kind of deserve that, like it cannot be you get squeezed out or the price doesn't move the way you want and you say, what the fuck? Like, why? You can't say that, and that's that's what I'm hearing a lot from my speaking to different traders of all different levels. Like, something I have to warn you about, we all have our own standards. Like you could say like, oh, I only take B grade trades or whatever, A grade trades. It's it's not a mistake to take a poor grade setup. It's a mistake to take a poor grade setup and not know why. And in my opinion, like when people loosen up their kind of they loosen up their rigidity in terms of selection, uh, it's for the wrong reasons. So, during COVID, for example, there was a lot of mania to the point where that technical trading, technical analysis, technical trading was like the dominant kind of strategy at the time, since extensions of incredible magnitude were very common and many of them happened simultaneously. So personally, during that time, I learned a lot of different technical setups. And when I look at periods of time like now, I can rely on those setups that I had learned back then in order to take advantage of certain trades now. Like setups where you don't necessarily get the edge from like filings or from anything else. Like and it's not just like, hey, it just popped up, I'm gonna short it. Like I think that's where like people really get it very wrong. In my opinion, if and when you take technical trades, you need to be able to answer a couple questions beforehand. You need to be able to say, what is the setup? Like, can I put a name to it? Do I know what it is I'm trading? You have to answer, why am I trading this? Like why is there edge in this setup in particular? Like if trading is about supply and demand imbalance, where is the imbalance occurring? And how is it occurring? Why and how are basically interchangeable. Where will it occur? Technical trades are very reliant upon location. Like it's not often that you just short something that just goes parabolic and you're rewarded handsomely. Like I know that people tend to do that, but again, like in my group, I shared something called a probability map, and the cliff notes is essentially like when you short something that is going straight up that has had zero pullbacks, you are basically taking a trade that has 0% probability. Now you can enhance those probabilities with the use of signals or with the use of like technical setups. For example, like if we're running into a specific form of resistance, or if you're seeing some sort of exhaustion, or you're seeing something that is repeatable and that you have basically playbooked. Those are the only times I feel that you should be able to take those trades. And what the error in logic that I'm seeing right now is that people are too willing to take those trades when it's not apples to apples. Again, like when I see that trade, I see a whole host of factors and I can name the setup, I can name why, where, how it works. If you're taking that setup and you get rewarded for your own ignorance, that is a major mistake because that is not a sustainable habit that will help you in the future. If anything, when things get tougher, you're just going to put yourself in a compromised position. Why is that important to me is because like I've experienced that myself, like very much so. And I learned from experience, and without basically being able to reflect upon it with my friends and just ask questions for myself, I wouldn't have been able to recognize like selection is probably the most important thing in terms of being a consistent trader. Because like what people see when they see stocks that just die and they're not in it is they see reward left on the table, they just see like wins that were not something that, I mean, they see wins that were not there, things that they could have attained. But what you don't see is when you avoid poor selection, you like any loss you avoid is basically a gain, because in trading, really, like as much as you make, you probably lost a fair bit of that. So it is a give and take. You're going to lose, you're going to win. The aggregate of those net results is going to be your P&L. And so by reducing the amount of losers you have, the more effective your trading will be, just bar none. Because you can always look back and look, what are my largest losses? What are my biggest losing days? If you net those out of your P&L, you'd probably be extremely happy. So it's not really necessarily about like what you missed. And you have to be able to express to yourself, like, you have to be able to coach yourself to say, like, that situation where the stock had zero bounces or had not put in any probability of it being a good trade, or that just instantly died, is like not something that I should be capturing. And you should never be like, I need to make a system now to increase all my signal speed to become more aggressive, because all that does is really just chop you up when the market normalizes or goes the other direction, and then all of a sudden you become hopeless again. Like, you reward it now and you pay for it later. That's the tax on having good results. And you don't want that. You want to have a smooth, consistent process so that there's not like these emotional volatility with your thinking, with your strategy, with everything like that. Now, what I would say is, like, for example, if you see opportunities that you normally wouldn't take, the first thing you should do is look to reverse engineer. So regardless of if there's a fundamental reason or a technical reason, you need to do your best to essentially analyze, like, why did it happen? What pieces of information did I miss? And try very hard in after hours in particular to go over all of the factors involved in that trade. Now, like, honestly, the majority of Twitter, in my opinion, does not really research stocks like very effectively. And I'm not talking like you have to have a complete mastery of all all the factors, or like spend 10 minutes or 30 minutes or an hour really digging through everything. I'm talking about a cursory overview, like looking at something between a couple seconds and a minute, 2 minutes, and being able to form like an accurate assessment of like the things that matter in particular to the trade. So something that I teach is basically what I call the four pillars, and essentially it's the technical aspect, the fundamental aspect, the news, and the cycle. And if you basically reverse engineer all of your trades, or like all of the happenings within the market under that lens, while it's not like the most comprehensive, like 100%, you're going to get very damn near close, like 90% of the way there. And you're going to be able to say, yeah, that did die. It wasn't a good trade, but it's a bearish market. Or that should have worked, but it was a bullish market, or etc. Right? Like, I just see it so often where people do not correctly analyze their trades, and that is because of the stigma that essentially, like, no research needs to be done. Like, it's like, of course, traders en masse would gravitate towards like, what is the simplest explanation? What is the simplest way to do it? When in fact, like, trading is a very nuanced game with a lot of information associated with each trade, to the point where, like, you still, as an experienced trader, learn every single day or miss information. And the way to address that is essentially by creating systems that will capture that information in the future. For example, if you were unable to like identify like like a key phrase or something like this in the filings, for example, you might add onto a checklist of terms that you will search in the future as a result of a missed opportunity. And so when you therefore go into that trade in the future or similar scenario, you would have built out the skill to capture that information in the future. That's the most important part. Is not the capturing the trade now. It doesn't even matter what happens now. What matters is that you actually understand like what you're trading, first of all. And if you don't, figure a way to understanding. And you don't have to come to an absolute conclusion. Essentially, you can just come to a thesis, a hypothesis, like a scientist, and test your understanding of why that situation caused like a good setup. And if you so happen to, come upon something that works in the future, you're building a stronger case in terms of probability, and that's the best you can do. And sometimes you're wrong, or sometimes you're wrong, but not for the reasons you believe. Like again, like cycles, for example. Because, for example, when I look at trades that don't fade or they kind of stall out, sometimes traders will tell me like, dude, like I cannot get more than 1-to-1 risk reward on this trade. Like, what am I doing wrong? I think I need to tighten my wrist, or I need to try to get in a better entry or something like that. And I'm like, no, bro, like the stock just did not fade today. Like that's all there is to it. It should have, it would have, but it didn't. You have no control of the outcome. So that is what inexperience leads you to believe when you make all of these assessments based on literally just the information that you're experiencing now. So until you can achieve a consistency over multiple cycles and really understand where you fall, like realistically in terms of performance, you will never have a grasp of the markets because they're always changing. There's always contradictions, and you have to know this. So earlier today, for example, I'll use a realistic example again. So earlier today, like AGFY, let's just say, like really good fading opportunity, of course. And what I noticed is that, like I've been telling people in my group that I think that there's going to be a squeeze coming at some point, or I think that people are getting too greedy. I can sense the feelings of FOMO. I can see trades people wish they were in that they weren't, or were not prepared for, or they have regrets about, and they intend to make that work in the future. You want to think of yourself as a sophisticated trader, a professional trader, and typically traders who are on the short side and small caps typically tend to lean towards the more sophisticated side. And yet you're doing the exact same thing that the traders that you make fun of, like who are long or whatever, do at the same time. Like they do the same thing as you, just the opposite, you know? Like you're getting aggressive, you're getting FOMO, you're getting greedy, right? That's the exact same parameter that establishes your edge on the other side. So maybe you're not as sophisticated as you believe, okay? Now, when, let's say, for example, AGFY pulls back, consolidates, looks like it potentially, that's it. Like what you don't realize, like the underlying thesis of the stock did not change based on where it topped out. So whether or not, if this was maybe like a week and a half ago, maybe that was it. Maybe that would have been it. What people don't really think about a lot of times is like trading and price action is driven literally by the emotions of traders. And so when I'm talking to you about like, hey, traders are getting aggressive, hey, traders are being really, they don't really know what they're trading, they just want to trade it because they see it working. Then you get that price action where, okay, we squeeze up one more time. And not only do you get that squeeze up, but you get that very quick minor breakout and slam back down. And the reason why I'm saying like that to me is so indicative, and I was typing with my trading buddies earlier this morning that like that is really kind of encapsulating the greed of the moment. Now, like we're still in a bearish moment, bearish market, but these are traders just getting squeezed out. And traders who don't really know what they're trading, why they're trading it. Now, like there was one specific detail about that trade that my group learned a lot later on regarding like a conversion price change, etc. But like for the most part, I think maybe 99.9% of traders, including myself at the very beginning, would have taken that trade on the basis of like the technicals alone. However, like people also don't recognize that it was a low float stock as well. And those stocks typically are quite dangerous and in a different environment potentially could have been disastrous. So again, like training and having been trained to take setups that you don't necessarily deserve to be taking without the understanding. When I looked at that trade, I did observe it from a technical standpoint at the beginning and had a technical thesis and an actual technical setup associated with that trade. So when I took it, I knew exactly what I was getting into without overly emphasizing its importance. Like I didn't like if it broke out and squeezed and whatever, I'd be like, okay, fine, fuck it. You know, I mean, like I wasn't that attached to the stock. And that's the difference when like you come into the stock with expectations and understand kind of like the grade of it, and when you don't. And that's even with me being ignorant of like any other detail besides my technical setup. Secondly, and this is kind of like just a minor detail that does not relate to what I was saying, but like the behavior of the stock, like regardless of low float, high float, market caps, etc., it's more important to kind of read the liquidity of the stock and like how thick or thin it's trading. So, for example, like there are stocks with very high floats and market caps that trade more thinly than a low float stock like this. And in this case, you have a low float stock trading very thick. And what I mean by that is like if you go back a couple weeks, like we're in December, and you have this exact same float situation, that stock is breaking out over the high day at the open and holding up, right? Same kind of situation without any of the fundamental details. Okay, I'm omitting that just for illustrative purposes. And you could see within the price action of the day that at the open we have these pushes, fail, push, and fail. Like with the influx of volume at that point in time, with the greediness of short sellers, uh, that easily could have been a very bad situation, and it will happen in the future. I can guarantee that that same situation that people justify without having known the information that they know, without being able to quantify as a setup, without having reverse engineered the setup and done a diligent job of creating a system to capture in the future, those of you who do not understand those aspects of the trade will get squeezed next time. Like, guarantee you that. So be very, very careful when you overemphasize any particular market. That is like not the point. Let's see. And this is kind of for my trading group because originally this was going to be a webinar for them. Is what I wanted to say to you guys just to close this out is like kind of what you give is what you get. Like in terms of myself as a person, you know, in that group, if you don't speak up or if you don't ask questions or engage, I will not give you anything. But you, as you can see, like when we have this very fruitful conversation with Derek, like he types me three sentences, I type him like 2 pages worth of information. You know what I'm saying? Like if you don't put in effort, I will not put in effort for you. But if you put in effort, I will put in like 3 times or 10 times as much effort as you do. So just keep that in mind when it comes to dealing with me. And overall, guys, like I hope that you guys enjoyed this Twitter space, and it helps kind of brace you a bit and maybe tone it down a little bit. Again, like as somebody who gets to speak to a lot of different traders like every day, basically I have like a very keen sense of the emotions of the market, specifically traders within this niche. And not only that, but like even without being able to speak with traders, consistently over the past 7-8 years, I've always not like the beginning, but like maybe halfway through, like 4 years in, have just started to recognize like these very clear patterns of behavior and psychology of overall market. And it's not like you need other people to figure this out. You only need yourself and how you feel. Like, I feel greedy. I feel like I should take these trades. I feel like I should add in more. That feeling of emotion is like amplified because you're extrapolating that amongst everybody, right? And there is no one way to like really succeed at this in terms of like that you will find the golden, strategy or whatever. A lot of it is about like surfing the ups and downs and doing it very elegantly, like having poise in your approach, not drawing down really hard in hard times, not being greedy to the point where like you change how you behave in good times, and always bracing for one or the other. Like if there are bad times, there will be good times. There are always good times. In 2022, it might have lasted months. It might have lasted the whole year that it was a piece of shit. But it became a lot better. It's a lot better. When there are good times and you feel like you're going to be the best trader in the world and that you're compounding to be the next $1 million trader or whatever, you're going to take a big ass loss coming up soon. Okay. And if you are not constantly thinking about that, you are not doing it right. The only emotion, or one of the only emotions that you want to bring into trading, is impartiality. You need to not get so excited and so happy and go on Twitter and post your chart and shit and pretend you're the best trader in the world. Because what that's going to do to you is when you are in a trade that you feel like everything aligns well for you, it's working too beautifully, and you overcommit resources to it in terms of risk, and your expectations are very high, when that stock does not do what you want to do, you will no longer accept the outcome. You will be in so much denial of what you're seeing that you're no longer trading for yourself. You are trading your own ego in those moments. And that is only one scenario that can occur when you subscribe to the feeling that you are the best trader in the world, or that you are going to make leaps and bounds, because ultimately you're just being rewarded for trading well, and that's all we are doing. Everybody who makes money in trading is rewarded for trading well in the long term. Traders who do not trade well and who are not diligent or nuanced will end up losing all of their confidence, burning out, experiencing hardship at one point or another, and then, who knows where they will be. They will go change their strategy. They will just stop trading the market, and that will be maybe one of the worst decisions they can make when all they had to do really is just do the same thing. And the last thing I'll say is like, there are so many people that I know where we get to a point like in my coaching that I'm like, all you have to do is do the same thing for like 2 months, because we need to know that you're not making any mistakes in terms of your performance or your not following rules, and that we can build like a statistically significant sample size of information that we can base our further improvements and optimizations on, and they can never do it. Like, they will always experience these kind of markets or those kind of markets and be like, hell no, it doesn't work no more, and just completely swap everything. And then two more months happen, and I'm like, do you have any do you have any more data? Because more time has passed, you should have more information built up, you should have more experience. And they're like, no, I don't, because I changed everything and I have no fucking clue if it matters. And I'm like, well, that's just amazing, because now we're in a market where we're heading into earnings, that it's a little bit too easy, and that we just came out of a market that was completely outlier and that you have gained no information whatsoever. That's awesome. So now you have to extend your lifeline a lot more, right? You don't want to be that guy. You would have rather gone through this situation and the next cycle, gathering significantly, important data for your trading, and then now you can start doing the things that you want to do. You can start taking steps like, I can add now, I can increase my risk, whatever. And in doing that, you'll experience a couple of situations, but mainly, okay, I did it. It is not really working for me. I'm going to take a step back and do what I was doing that was making me consistent in the first place. And then I can try another idea. Or it does work, and you say, okay, now I'm going to experience that throughout another couple cycles. Many times in my career, I've tried to change things that I thought was the best possible optimization, and it works flawlessly for a period of time. And then it eventually breaks and breaks down very hard. And to the point where it's like so punishing that you don't even, you become sick with yourself, right? And if you get to that point from the get-go and you have no ability to revert back to what you were doing, then you will be totally lost and completely fucked. That's all there is to it. So you have to remember that, like in trading, bad habits can be rewarded for long periods of time, and good habits can go unrewarded for a period of time as well. But we're in the business of longevity. Being consistent is the first most important step. And that strategy, whatever you're doing at that moment, like your system or like your set of inputs or whatever indicators, I guarantee you in about half a year or a year, you will not even be using the same thing. So don't even stress about it. Like, they're there to basically help you achieve an outcome of where you can repeat the same results. We had a really, really good conversation in our chat earlier today where this has got to be the last thing, where I was mentioning how, like, there are traders that cannot really explain like how they do what they do. And there are traders like myself where I feel that like I can transfer the skill to someone else. Like, if I told my mom how to do it, provided that she had enough focus and wanted to do it, she could do it. I know that everyone in my group of like trading friends, they could also teach their mom how to do it. And that's the difference. Like, when you have the ability to help someone understand what you're doing that doesn't know a damn thing about trading, then you can say you have a process that can be repeatable and consistent. Because up until that point, essentially all you can do is say, oh yeah, I just do this. It might be very difficult for you to do. I'm not sure if you'll really catch it. You have to spend a lot of time figuring it out. Whereas I can literally go to my wife and say, this is how I analyze a trade. These are the steps that you would take. This is what's important. This is what's not important. And she could tell me what the grade of a stock is without knowing anything about trading. And yet there are traders who are so-called professional traders who cannot figure that out, or could not be helped to help someone else understand how to do it too. And not only that, but you must also consider like the implications of what you're doing as well. For example, like, you still have to maintain, like, within your system, a balance, like a harmony of how much reward you're going for, how much you balance your win rate, and be able to accept the drawdowns and the psychological benefits or disadvantages of both. Like, you can't win on all your trades and have insane like 20R wins, and you can't have 20R wins without losing a lot, right? And I think that's what doesn't get represented very well in trading in general, is just like people would assume like, oh yeah, this guy had like a crazy 10R win or something like that. Now they all they do is just say like, oh, if I got a 10R win in my system, like we would be going crazy. But they don't realize like what goes into what makes that trade possible is the emotional, mental drawdowns and pain. And if you want to preserve essentially like your mental state and you want to maintain your stat line, like you have to accept that you're not going to get those mega winners. But at the end of the day, the one secret is that it doesn't matter how you do it, because both of those strategies can be optimized with position sizing and with literally just math, like straight up. And so you don't need to feel less than anybody with what you're doing. The main and only important consideration of any trading strategy is if you put your stats into an equity curve simulator, does it make money and does it make more than enough to accommodate you being a human and making mistakes? It'll never be perfect, right? So you have to anticipate some flux and fees or whatever. If that's the case, do not be concerned unless your return, like over, however many trades, is very tiny. For example, like if your strategy says, hey, over 100 trades, you'll make 25% return on your account. As a day trader, no offense, that's absolutely horrible. So at that point, you would have to reevaluate. But if, for example, it was much higher, it doesn't fucking matter. You don't need to have like these bang out trades. Okay. And I'm telling you from someone who's like done both. I've gone all the way. Like talking about having 20-hour trade, whatever. But to get to that point, you have to be able to suck up like 30% drawdown. I know people who lose like 5R and they're like, fuck this, I'm the worst trader in the world. So imagine you lose 30, right? They only see the result. They not see like the process that goes into it. All right, so that's all I want to say. Just be on guard, you guys. And I basically want to put this out there. And I know like in my head, sometimes I think, you're helping a lot of people. But at the same time, I recognize like we're still very like small community, and people who want to be here and who do show up and try to make this work are people who actually do deserve the information, because like it's not easy. I would never say trading is easy, and people who make it seem easy are like the biggest assholes ever, because you're doing like psychological damage to the rest of the community by setting expectations at a place that should not be. So that's just my words that I want to share today. All right, thank you guys for listening. Have a good weekend and good quarter. Make sure that you are not caught off guard and that you do not get too loose, because things will change.